All right, diving deep today. We're looking at a bunch of sources, primarily coming from the stocktelescope.com website.
Right, getting that real pulse check on the market and the economy.
Exactly. And this is all current as of today, Friday, June 6, 2025.
Fresh off the press.
Yeah. And our mission, like always, is to kind of cut through the noise, pull out the really important bits, and help you quickly understand what's actually driving the headlines right now.
Think of it as the essentials without you having to wade through everything.
Precisely. Now, yesterday felt a little choppy, didn't it?
It definitely did.
But looking at the futures this morning, seems like there's a bit of a mood shift, maybe fueled by some new economic data.
That choppy ride yesterday, yeah, it saw all three major indices closing lower. The Dow dropped 108 points.
Okay.
And both the S&P 500 and the Nasdaq finished down by more than 0.5%. It was pretty broad.
So a general pullback.
Okay.
But then you turn the page to this morning, and futures are, well, they're pointing higher across the board.
They are.
What's behind that shift? The sources seem to be pointing straight at the U.S. jobs report that just dropped.
That seems to be the catalyst, yeah. We'll definitely unpack the details of that data in a bit, but it's clearly giving the market a more optimistic start today.
Right. But, to really get what's going on today, we can't just look at the big indices. We need to dive into some specific company stories, don't we?
Absolutely. And one story in particular just dominated everything yesterday. Pretty dramatic stuff.
I think I know where you're going. You really can't talk about yesterday without hitting on that whole Tesla, Elon Musk, President Trump situation. The sources painted as, well, quite the saga.
It really was. Tesla shares, that's TSLA, they took a massive dive yesterday, dropped a staggering 14%.
14%, wow.
Yeah, and according to the sources, this was kicked off by a, let's say, public dispute between Elon Musk and President Trump, apparently over government spending and policies.
14% in one day is huge. The sources actually put a number on it, right? Said it wiped out $152 billion from Tesla's market cap.
That's the figure. $152 billion makes it Tesla's largest single-day slide ever.
Just incredible. Shows how volatile things can get.
Absolutely. A historic move for the stock really underscores how sensitive it is to these, high-profile political wins.
So what's interesting, though, is the immediate reaction today. It's already bounced back a bit.
It has, yeah. The stock's rebounded about 5% in early trading this morning. So it suggests maybe the initial shock from the political friction was intense, but the market's still kind of digesting it all.
Okay, so a bit of a recovery today. But what about the longer-term picture here? The sources mentioned some pretty significant potential risks for Tesla's business, didn't they?
They did. This really brings up questions about future regulatory support. President Trump is reportedly threatening to pull back government backing for Tesla in a few key areas.
Like what specifically?
Well, things like regulations needed for self-driving cars, which could hit their FSD plans. Also, those EV tax credits, a big incentive for buyers. And even potentially Tesla's revenue from selling emissions credits.
Those aren't small things. They could really impact Tesla's bottom line and how they compete.
Exactly. These are major potential headwinds.
And this whole political drama just piles on top of what's already been a tough year for Tesla shareholders.
It really does. The sources put it in perspective. Even before yesterday's plunge, Tesla had lost $380 billion in market cap just this year.
Oof.
Yeah. And after that 14% drop yesterday, Tesla is now apparently the worst performing large cap stock of 2025. Down 29.3% since January 1st. That's a significant underperformance.
And sounds like the threats from the president might not stop just with the car company. Could affect Musk's other ventures.
That's what the sources suggest. President Trump might also target SpaceX, potentially canceling billions, literally billions of dollars in federal contracts.
Contracts with who?
Big ones. NASA, the Pentagon, various U.S. spy agencies. These deals are critical for SpaceX. So yeah, the potential political fallout could spread well beyond just Tesla.
Okay, so the Tesla-Musk-Trump story is obviously huge. A clear example of politics directly hitting the market. But looking through the rest of the material, there were quite a few other company headlines worth noting, giving us a broader picture.
Definitely. Let's shift gears completely for a second. Staying somewhat in the Musk universe, but focused on future potential, xAI. Morgan Stanley is reportedly pitching their financials.
Oh, interesting. What are they projecting for xAI?
Massive growth. They're estimating over $13 billion in annual earnings by 2029. The sources frame this as xAI really trying to capitalize big time on all the momentum in the AI market right now.
$13 billion by 2029. That's certainly ambitious. Okay, what else? Moving away from tech, maybe?
How about Supreme Court? There was a notable ruling impacting gun manufacturers.
Right, I saw that. What was the decision?
It was unanimous, 9-0. They dismissed a case brought by Mexico against U.S. gun makers like Smith & Wesson, ticker SWBI, and Interstate Arms.
And the impact of that.
Well, according to the sources, it effectively shields U.S. gun manufacturers from these kinds of foreign government lawsuits trying to hold them liable for gun violence abroad. So, a clear legal win for that industry.
Okay. Shifting to retail now. Walmart seems to be pushing further into drones.
Yes, Walmart, ticker WMT, they're reportedly expanding their drone delivery service quite a bit. The plan is to roll it out to 100 stores across 5 states.
Trying to keep up with Amazon on delivery speed.
That's how the sources frame it, yeah. Boosting speed and efficiency, especially in that ongoing competition with Amazon, ticker AMZN, in e-commerce. It's a real example of retailers investing in new delivery tech.
Speaking of Amazon, they had some news too, but smaller scale. Job cuts.
They did. Reportedly cutting under 100 jobs, specifically in their books division. That includes Kindle and Goodreads.
Why the cuts there?
It's described as part of their bigger, ongoing effort to boost cost efficiency across the company. Relatively small numbers for Amazon, but shows that focus on streamlining. Interestingly, their stock is actually down about 5.6% year-to-date, according to the sources.
Contrast that with Apple, which has seen a much steeper slide this year. The sources list several reasons for that, right?
Yeah, Apple, ticker AAPL, reportedly down 20% year-to-date. That makes it a pretty noticeable laggard among the big tech names.
And the reasons.
It's a mix of things, according to the sources. There's the perception that their AI rollout is slow compared to competitors, ongoing tariff risks that could hit their costs, iPhone sales looking a bit stagnant, and that's still their core product. And then there are the legal threats.
What kind of legal threats?
Mainly focused on 2 things. Scrutiny over their App Store fees.
Yeah.
You know, the commission they take and those big payments they get from Google to be the default search engine on iPhones and iPads. These are pretty high-stakes legal battles.
Definitely could impact major revenue streams.
Okay, let's look at another giant, Disney. They put out some data about their theme parks.
They did. Disney, ticker DIS, shared some numbers on the economic impact of their U.S. theme parks. And they're pretty powerful economic engines.
Oh, powerful. Reportedly generating a massive $67 billion in annual economic impact and supporting over 400,000 jobs across the country. The sources really highlight how critical these parks are to state economies. It's a good reminder of their huge physical footprint beyond just media.
Absolutely. And one more piece of company-specific news involved a major healthcare player launching a lawsuit.
Right. United Healthcare, ticker UNH. They filed a defamation suit against The Guardian newspaper.
Over what?
UNH alleges that The Guardian published false claims about their cost-cutting measures negatively impacting patient care. The sources also mentioned the context here is sensitive following the murder of their CEO last year. UNH claims the report caused significant reputational damage.
Wow, okay. That highlights some serious tension there.
Definitely.
All right, let's move on from those individual company stories. The sources also gave updates on recent earnings reports, and some of those market reactions were pretty dramatic.
They were. Let's hit a few where the reaction was particularly interesting. Broadcom, ticker AVGO, saw its shares fall nearly 4% after earnings. Now, that might sound weird because they actually reported revenue and EPS that slightly beat estimates.
So why the drop if they beat? That doesn't quite add up on the surface.
It's a perfect example of how market expectations work, right? Especially in hot sectors like AI. The sources explain that while Broadcom's results were okay, slightly beating estimates, their guidance for the next quarter Q3 revenue projected at $15.8 billion only slightly topped expectations.
So it wasn't a big enough beat on guidance.
Exactly. It underwhelmed investors. The market had built in these really high AI-fueled expectations for Broadcom's growth, and the guidance just wasn't strong enough to meet that super high bar. It's that classic case. Beat the numbers, but miss the hype.
That really shows the pressure these companies are under, especially in AI. Now, another one with a steep post-earnings drop was Lululemon.
Oh, yeah. Lululemon, ticker LULU, their stock tumbled over 20% after they slashed their profit outlook for the year.
20% is a huge reaction. What reasons did they give?
The main culprits cited in the sources were the impact of tariffs and, interestingly, weak U.S. store traffic.
And the tariff issue probably hits them hard given their manufacturing footprint.
It seems so. The sources specifically mention that 68% of Lululemon's production happens in Vietnam and China. So, rising import costs from tariffs plus general inflation are reportedly squeezing their profit margins quite a bit. That forced them to lower the outlook.
Makes sense. We also saw a big drop for Brown-Forman, the spirits company.
Yes, Brown-Forman, ticker BFB. Their shares plunged 18% after their Q4 earnings came out. The report wasn't great. Revenue down 7%, and earnings per share fell a sharp 45%.
What drove that poor performance?
The sources point to ongoing uncertainty around tariffs impacting their global sales, plus generally weaker demand for spirits right now.
Okay, so some significant negative reactions there for LULU and BFB, driven by tariffs, inflation, demand issues. But the sources listed quite a few other earnings, too. Samsara, Rubrik, DocuSign, Service Titan, Vail Resorts, Braze, ABM Industries. How did they fare generally?
Right. And it's worth noting, just for balance, that while we focused on the big drops, most of those other companies actually reported beats on either revenue or EPS or sometimes both. So the overall earnings picture is actually pretty mixed. Some big disappointments, sure, but also pockets of strength in there.
A good context. Okay, let's shift focus now to the broader economic landscape. That U.S. jobs report was clearly the big data point this morning. What were the headline numbers?
So the U.S. economy reportedly added 139,000 jobs in May. That came in slightly ahead of what forecasters were expecting, which was around 125,000.
And the unemployment rate?
Held steady, stayed at 4.2%, same as the previous month.
Okay, so on the surface, sounds like decent job growth, slightly better than expected. But was there any nuance hidden in the report?
There was, and this detail is pretty important. The sources mentioned that the job growth numbers for the prior 2 months, March and April, were revised lower, collectively down by 95,000 jobs total.
Okay. So May beat, but the previous months weren't as strong as we first thought.
Exactly. It just adds a layer of caution to that headline May number. The recent trend maybe isn't quite as robust.
That is key context. Now, looking internationally, there was a move by India's central bank today.
Yes, India's central bank cut its main lending rate, the repo rate, by 50 basis points. That was actually a bigger cut than most economists were predicting.
Where did that put their rates now?
Down to 5.5%, which is reportedly the lowest level in 3 years. It's a pretty significant move aimed at boosting economic activity there.
Interesting. Okay, turning to international relations, specifically trade. Some positive news on the U.S.-China front.
Seems so. According to the sources, President Trump and Chinese President Xi Jinping had a phone call described as very good, and they reportedly agreed to resume U.S.-China trade talks.
That's potentially significant, right, given the tensions?
Yeah, it's seen as a step that could ease the tensions that have built up because of all those steep tariffs. Those tariffs have disrupted something like $600 billion in annual trade between the two countries. So just resuming talks is a positive sign.
Definitely something to watch.
Yeah.
Back in the U.S., the Supreme Court had a couple of other rulings besides the gunmaker one.
They did. 2 other unanimous decisions were reported recently. One backed a workplace bias claim brought by a straight woman. Another granted a tax exemption to a Catholic charity. So the court's busy on various fronts.
Okay. And finally, just looking ahead at the rest of today, what's still on the economic calendar?
Right. Coming up at 8:30 a.m. Eastern, we get the official release of several key labor market indicators. That includes the final non-farm payrolls number, the unemployment rate, data on average hourly earnings, both month over month and year over year, and the labor force participation rate.
So markets will be watching those closely for confirmation in more detail. And there's also an IPO happening today.
Yes, a company called Omada Health, ticker OMDA, is scheduled to go public today. They're described as a virtual chronic care provider.
Any financial details mentioned?
The sources gave some context. $189.67 million in trailing 12-month revenue, and year-over-year revenue growth running at 38.29%. So a look at a new public company in that health tech space.
Okay, so let's pull back for a second. Looking at everything we've covered from these sources from StockTelescope.com today, you've got dramatic company stories like Tesla, driven by politics.
Yeah, and then key economic data like the jobs report moving the whole market.
But policy moves like India's rate cut, the resumed trade talks,
Yeah.
it really paints a picture of how interconnected everything is, doesn't it?
It absolutely does. It shows that immediate, almost tangible impact that political decisions and policy actions can have, right down to specific company stock prices and the general market mood on any given day.
You see tariffs hitting Lululemon's earnings or phone call between presidents maybe easing trade worries.
Exactly. It's not just about the financials in isolation anymore.
Right. Which brings me to a final thought for you to chew on, building on what we've seen today. Given how directly political actions like that reported Trump-Musk spat or the Trump-C talks, and policy decisions like interest rates or tariffs seem to be influencing company values and the market just today. How much do investors, or really anyone just trying to understand the economy, need to treat the political and policy landscape now? Is it still just some external thing happening over there, or is it becoming like a fundamental factor you have to analyze just as closely as the balance sheet?
That's a really good question. Is it now core, not just context?
Yeah. Something to definitely consider as you process today's news and look ahead.
A very relevant point in the world we're in now.
Thanks for diving up with us today.